Good morning, everyone, and welcome to the PivotBoss Pre-Market Report for Monday, March 5th, 2018. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now, we're basically holding, right where we opened trading Sunday evening. We're sitting right there. We opened a little bit higher here off of the previous session's mid price. We came back down to it and actually below it and rallied back up to new highs, and then we have just come back down off those highs. So we're just kind of trading in a range at the moment. We could continue to see some back and forth here. I think the key level to watch on a short-term basis right now is going to be the 2700 to 2703.75 level. If the ES can push through that zone, we could see a quick move back to 2720, followed by a continuation into 2750. That could be a short-term move into those two zones. So keep an eye on 2700. Basically, that's going to be the gateway to open up those higher levels. Now, given the fact that we've been kind of on the push downward here, if price pushes above 2700 and fails, we could be looking at another dip into the next LVM below, and that's going to be 2616. So right now I'm going to be keeping a close eye on 2700 and see how price plays around that area, and any continuation through that zone could be a quick push back toward highs. Otherwise, a rejection at that area might signal that another dip is coming down past those previous lows. So again, key levels here. If we were to see a push into this LVN, it could be a great short-term buying opportunity back toward 2703, as the market, remember, is likely to stay within these inner key levels here, the 2791 and 2616. After forming this wide impulse sell-off move, we're likely to stay inside this range for the most part. Doesn't mean we can't get outside that range at some point, but early on at least, we typically stay within that zone. So if price were to come into this LVN, it could be a great buy back up. So those are a few of the opportunities that I'll be watching here to begin the week. Let's take a look here at the NQ. Alright, here's the NQ. For the most part, the NQ looks very similar. The one difference is that the NQ has formed a distribution in the upper half of the price range here. So basically, this is where we're trading in the NQ. The fact that we rejected off this low suggests that we continue higher as well. If you look at the 60-minute market structure, 68.50 is a good level to watch there. That's basically this line right here. There's an LVN there, previous close just above. Basically, getting through that level would suggest a retest of highs and likely retrades that 70.50 level. And if we can get that, there's probably another pullback coming yet again as the market continues to trade within 70.50 and 66.50. That's likely to persist for at least a little while longer before we see some sort of expansion. If there's any failure to hold this 66.50 at some point, we could retrade and rotate back down, but again, this provides another opportunity to buy it on a longer term basis. So this is the key level to watch. If 66.50 is going to be tested, it's that midpoint that's going to lead the way first. So that midpoint would then be the 67.35s, and basically that level right there, if broken, would open the door to a retrade of 66.50. So that's going to be the level to watch short term during the session today. But if tested today, the idea is that you would likely see bulls continue to defend it because the wave of momentum is likely shifting to the upside. So right now, bid until proven otherwise. So that's a few ideas here to watch as we head into the week and throughout the month. Also, if we take a look here at crude oil. Let's type it in over here. So crude right now is showing some rejection of the previous highs. And if we zoom in a little bit, let's zoom in a little bit more right here. You can see that we have 2-day highs here, previous session's highs here, and the market took out both of those highs and rejected both. The first time was an overnight trading, price pushed up, rejected, and pulled back. Then it went for a second go and rejected harder and pushed to new lows. And that's kind of where we are right now. And so at the moment, we're kind of, at least on the intraday chart, it looks more of an expanding range quality to it right now. We could continue to see more development of that range on a short-term basis. Very similar to the NQ, this midpoint is very, very important. If we fail to hold that midpoint, which is 60.87, that's when we could start to see another wave of weakness back towards 60. But the idea right now, at least short term, is that we likely, at least for the day, likely stay within 61 to 62 for a while. But again, if there's any failure to hold that 60.87, things can get much, much hairier, and we could be looking at a push to new lows, perhaps below these lows. So again, the failure to hold above 2-day highs is concerning and could lead to more weakness. If price is able to reestablish above 62s, it opens up a retrade to retest recent highs. So right now we're kind of in this price distribution right here, and at some point when we see rejection, we might start to work our way up. 62 is the gateway to higher prices there. So those are a few ideas to take into the week. If we look at gold, here's gold futures. We talked about gold as being a buy opportunity last week. We got the major rejection right here after we saw a continuation down into our targets. Once we took out these recent lows, I mentioned that it would be an opportunity to retrade it back up, first to 1330, then to 1338. We might see some chop in here after that, followed by a continuation toward 1365. That's kind of been the path that we've seen here. The rejections have been pretty sharp at the edges, and then it takes some time to chop around the midsection before continuing downward. We've seen that pattern several times now on the way up, chop, 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 all the way up. And so we might see more of that behavior. For the most part, we're still flowing to the upside. The idea here is that this pullback that's coming into play right now, as long as price can hold that previous close here, which is about 1319, 1320, if price can hold that zone here, we could be looking at a slingshot continuation into the next upside targets, which could include 1338 over the next couple of days. And again, 2 weeks down the road, we might be at 1365. So overall, this has a good quality here to continue this thing higher. So it could be a 3-week trade overall if you hold it to the edge. Could be a 2-day trade, 2 to 3 days up to 1338, as long as that previous close can hold. So those are a couple of ideas to take into the week and the month. If you take a look at Bitcoin, right here, Bitcoin is still trapped between 10K, or 9K rather, and 12K. Again, 9K held as we thought it would, and we would likely see a move into 12K. We're approaching that target now. Very, very nice movement. Now the previous 5-day range is the smallest on record so far on a weekly basis, on a 5-day weekly chart basis, and we don't have many bars to really go off of here. But then this is brand new data that's starting to develop, but it's a very tightly coiled price action, which could mean this week is rather active in terms of price range. If there's any rejection up here, that could mean a quick reversal to retest 9K. That could be a wider range, an outside range. If price pushes through 12K, then we could see a quick retrade back toward 15. And again, that could be a wide range. So those are a couple of ideas to watch out for. I think the primary idea right now is that we trade into 12 and then perhaps fade back toward 9K, followed by another move up. I believe we're still in this range for a little while longer before we see the actual expansion. But above 12K opens up, and below 9K opens the downside. So that's the range right now. Very similar to what we saw here. All right. Lastly, if you go over to PivotBoss Masters /profits, this is our Masters lineup that we have for this week. We're beginning our live training schedule here. So if you are a PivotBoss Masters member, this is the schedule that you have access to later on today. Go to your Masters dashboard later on this afternoon, and you will actually see a link that will be used for our trading room today. We're going to have a private link here. This is going to be what we have up on deck, market structure principles and concepts. This is a powerful course. Our Masters members have been asking for this course for a while. We're going to delve into some powerful topics that basically lay the foundation for how all traders should approach a market. So this is going to be a fantastic concept, principles and concepts that we'll learn in that course. Tomorrow we're going to talk advanced risk and portfolio management, followed by quantifying volatility with ADR on Wednesday, trading with FOMC key levels on Thursday, and retraining your beliefs as a trader on Friday. So that's going to be our schedule this week if you're a Masters member. If you're not already a Masters member, this is a fantastic time to join. It's a risk-free offer. It's $9.95 to get into the training features, core trading and proprietary trading with over 30 hours of content in each of those two modules. We also have all of the PivotBoss proprietary indicators and code, including scans and tools and resources for various platforms, including thinkorswim, InvestorRT, NinjaTrader, eSignal, Visual Trader, OmniTrader, lots of different platforms. But keep in mind, if you use a different platform, you can still use this training. What we'll be discussing this entire week is platform agnostic. You don't need a platform to do what we're talking about this entire week. So Masters is built around a universal approach that anybody can use regardless of your platform, regardless of the duration of your trades, regardless of your experience level. And we also have proprietary tools that we offer and trade if you do use those platforms as well. Additionally, this is a lifetime offer, so you once you get in, you never have to pay for ongoing training and education moving forward. You pay once and you're done. Again, it's a risk-free offer, so if you don't like what's going on and if it doesn't jive with what you're doing, it's a 100% money-back guarantee. You're also going to get Swing Trade Pro. That's $395 value. It's a 6-hour, 3-part course with perhaps 270 slides of amazing content. That's a bonus if you get into Masters. You're also going to get 1 free month of our premium trading room as well, a $99 value. So basically, if you pay that $9.95 to get in, you're going to get about $500 of value right up front, in addition to all of the various resources and training content we have. Again, if you're a Masters member, we start today. It's going to be a lot of fun. Looking forward to seeing you soon. If you're a member looking to join Masters, this is a perfect time to get in, risk-free offer, and you don't get many of those in a market. So again, looking forward to seeing you all later on this afternoon. Good luck, trade well, and I'll see you soon. Take care.